Did you ever wonder why professional traders or institutional traders call retail traders dump money? I mean, it's pretty much a lack of respect, right? And look, the reason for that is because retail traders emotionally driven. They buy into hypes. They're extremely sensitive to market corrections or let's just say volatility. And they are overworking themselves, overstressing themselves, looking at the charts all the time. Good example would be GameStop. Everyone, was buying it because of the hype. Yeah, let's win against the hedge funds. And yeah, they did hurt a hedge fund. But in the end, so many retail people that jumped on the bandwagon far too late lost massive amounts of money. Because if retail traders of that kind lose money, it's typically life-changing losses. It's not a positive thing. Not at all, actually. So, but the professionals, they knew, for example, GameStop was a mess. 6 CEOs in 2 years. So that's why they were shorting it. And again, even after they pushed out that one hedge fund, there's many others that took over them. So there are clear differences between professional traders and retail traders. And the most decisive difference is a deep understanding of market dynamics and fundamentals. Also, what you don't understand is that banks and hedge funds and institutional players, they don't just trade a speculative position on the market. They make most of their money by front-running their customers. They know where certain flows are coming, which size, which direction, and they make quantitative bets even on that. So, the most successful hedge fund actually is Citadel, and all they do is they front-run people, essentially, by giving them free stock trading. So if you understand the mechanics of that, then you understand nothing is for free, in fact. Not at all. They just understand how to exploit people and how also, that's why the whole culture in the trading education industry is of that kind, because it fosters a gambling type of behavior, or it fosters also some sort of predictive type of behavior. For example, to be just looking at technical analysis. Technical analysis alone does not work. 100% not. It works just enough to hook you so you think it works. So now you think you are smart, you know something about the market that others don't. Well, I'm sorry to break it to you, you don't. You're just following spoon-fed patterns that someone gave to you that everybody else has access to as well. But technical analysis still has its place, but you need to combine it with, in my case, I have 7 building blocks of my strategy development approach so that it has a statistical relevance to it. Only then technical analysis becomes not random any longer. And I learned that basically also in my times in the bank, in the investment bank. Also, don't forget, there's also a lot of drivers in the market that you completely don't understand. Fundamental drivers, economic drivers, geopolitical events. And retail traders really only joined in this massive amount in the last decades. Maybe even after we had the whole shutdowns. So that's why they don't have enough of training, discipline, no method that the professionals have. And the professionals, they feast on them. So just because, you have access to indicators and charts and asset classes, that you cannot compete with those that are generations into this game. And if you think you can, you're mistaken. You need to play the game. It's like bringing a knife to a gunfight. That's literally what you're doing. So yeah, maybe you're going to survive one or two gunfights because you were somewhere in the group. But if you're in the front line, won't happen. You will not get out of this in one piece. So if you don't know anything about fundamentals, and if you're technical only strategy, because technical only strategies can work, but if it's not based on a statistical edge, then you will lose. You will lose. It's not possible for you to come out on the other side successful consistently. You may have a phase. And that's actually the biggest risk, is that when you think you know something, you had a strategy that worked for some months, but you never really understood the real edge of the strategy, or did it have one in the first place? Statistical one, obviously. And then boom, one day you lose big. And then you say damn, what happened here? What's going on? And then you re-risk more because it worked so well the last 3 months. So it has to continue to work, right? And then before you know it, you lose all the rest on top. And I've seen so many people, this happen to them. So just because you had a phase of winning, that's absolutely no indication for your skill set or ability to continue to win. You really, look, I'm not saying these things because I want to offend you or I want to sell you anything. Actually, I don't care. I absolutely don't care if you want to learn the statistical edge type of approach. But so many people think they understand what they're doing until it doesn't work anymore. And then they don't know why it doesn't work anymore. What should they look for? Where should they look for it? Well, what is going on here exactly? How should they improve, rectify the situation? And that's the difference when you have a proper structure, 7 building blocks, statistical edge, and then you can actually match it up with your testing and you can see where exactly have the last trades not worked out. You continue to have proper risk management in place as well. And then, but you can pinpoint your finger within the structure to what needs to be optimized or potentially changed or not. So maybe you just, your ability to decide what the exact market phase you're in is wrong. And that's why you're choosing the wrong tool. If you have the wrong screwdriver, you cannot turn the screw. That's simple. So that's why it's important that you understand the structure of strategy development. You understand what a statistical edge is. You understand your ability, your strengths and weaknesses, what kind of style suits you. All that, when it comes together, then it builds the strength, this real superpower ability that gives you also consistent profitability. And that's really it. It's simple. It's not even that complicated. But you have to look at it from that angle, from that perspective. I love the saying, probably don't hear me the first time say it, when you change the way you look at things, the things you look at change. So if you want to take responsibility for yourself and learn how all that stuff works, then obviously you can do that here. If you have any questions about anything that I discussed in this video, use the comments. I'm really happy to answer your questions, to see what is torturing you, what is making you happy. Yeah, just leave your comments and I'll be delighted to try to give you even more direction and value there. So yeah, that's today's video. If you like my videos, I'd be delighted if you would share them, if you would like them, if you would help me build this channel out. I'm really trying to give as much of my experience and value as I can. I'm not here to, even sell you something or trying to pretend that you can become a millionaire overnight or any of these nonsense things. Trading in itself is a very valid way to become independent and financially taken care of in this day and age. Absolutely. You just must not confuse it with gambling. All right? Thank you very much. I see you in the next video.